Well, hello there. I'm Gemini.
All right, let's talk about taxes. For most of us, just hearing that word can make you want to run for the hills, right? It feels confusing, maybe a little unfair, and just complicated. But what if it's not? What if the whole tax code isn't a penalty, but actually a system, a game, with a set of rules? Well, in this explainer, we're going to crack that code. I mean, this quote just says it all, doesn't it? It perfectly captures that feeling that no matter what you do, you're getting taxed. And look, that feeling is valid, but just knowing that is only step one. Step two is realizing that financial literacy, knowing the rules, is the key that transforms you from a pawn in the game to a player with a strategy. So here's the game plan. First, we're going to completely reframe how we think about taxes. Then we'll get into the nuts and bolts, the tax brackets. After that, we'll open up the toolkit that every single Canadian can use to lower their tax bill. We'll even level up with strategies for businesses and side hustles, and we'll finish off with some seriously powerful insider plays. So let's kick things off with that big mindset shift. I want you to start thinking about the Canadian tax system like a giant game of Monopoly. Now, if you've never read the rules, you're just rolling the dice, hoping for the best, and getting hammered every time you land on someone's property. But the person who's read the rule book, they have a plan. They know exactly what they're doing. And this is the real secret. The wealthy? They're not playing some secret, different game. No way. They are on the exact same game board with the exact same rule book as you and me. The only difference is they've actually taken the time to read the rules. So our goal isn't to get rid of taxes. It's to stop playing blindly and start playing smarter. Okay, so if we're going to play the game, we've got to understand the game board itself. And in the world of Canadian taxes, that means understanding our progressive tax system and the heart of it all, the tax brackets. Now, this word progressive, it trips a lot of people up. A lot of people think it means that if you get a big raise and jump into a new tax bracket, your entire salary suddenly gets taxed at that higher rate. That's not how it works at all. A much better way to picture it is like you're filling up a series of buckets. You fill the first bucket at a low tax rate. Once it's full, your money spills into the next bucket, which has a slightly higher rate, and so on. And here they are, the federal buckets in action. Let's make this super practical. Imagine you earn $100,000 a year. You don't pay 26% on all of it, not even close. Here's what actually happens. Your first $48,000 are taxed at 15%. Then the money you make between $48K and $95K is taxed at 20.5%, and only that last little chunk of your income, the $5,000 above $95K, gets taxed at that 26% rate. It's a layered system. So now that we know how the buckets work, the next logical question is, how do we stop them from filling up so fast? Well, that's where your toolkit comes in. Think of these as the power-ups you can grab in the game, and they're available to absolutely everyone. Okay, first things first, you have got to know the difference between your two main tools, deductions and credits. A tax deduction is like a shrink ray for your income. It makes your taxable income smaller before the government calculates the tax. A tax credit, that's like a gift card or a coupon that you apply right at the very end. It just knocks dollars directly off your final tax bill. One shrinks the income, the other shrinks the tax. It's a huge difference. So what do these power-ups look like in the real world? Well, you've got some heavy hitters here. RRSP contributions are a classic deduction. They shrink your income. Then you've got things like donations to charity, medical expenses, union dues, and tuition fees, which all give you those super valuable tax credits, those gift cards against your tax. Now here's a pro-level strategy that can literally save you thousands, especially for you recent grads out there. Let's say you're a student and you have a $5,000 tuition credit, but you're only making $15,000 a year at a part-time job. Your tax bill is probably already close to zero. So cashing in that credit now is a waste. Instead, you can defer it. You hang on to it for a few years, and when you're making $70,000, you whip it out and use that same credit to save you way more money. That's playing the long game. All right, this is the big one. A question I hear all the time. RSSP or TFSA, where should my money go first? And there's actually a pretty solid rule of thumb, and it's all about how much you earn. If you're making under, say, $50,000, you're in a low tax bracket. The income shrinking power of an RRSP deduction isn't as valuable yet, so it often makes more sense to max out your TFSA first. But once you start earning more, an RSSP contribution becomes this amazing strategic tool to knock your income down into a lower tax bucket. Okay, now we're going to level up the game. If you've got a side hustle, you're a freelancer, or you run your own business, you've just unlocked a whole new set of cheat codes for the tax game. This is where it gets really fun. See, here's the fundamental difference. As an employee, you get paid, you get taxed, and then you pay your bills with what's left over. But as a business owner, the game flips. You earn revenue, you spend money to run the business, and you're only taxed on the profit at the end. That means if your home office takes up 10% of your apartment, you can deduct 10% of your rent. Your internet bill, your cell phone, your advertising, your accountant, it's all part of the game. And I love this quote because it is so true. You really do start to love receipts. It's a total mindset shift. That trip to Staples for office supplies, that's not just an expense anymore. It's a strategic move. Every legitimate business receipt becomes this little piece of a puzzle that lowers your taxable income.
But, and this is a big but, with great power comes great responsibility. The Canada Revenue Agency, the CRA, they want to see your work. And you are required by law to keep every single one of those receipts and all your business records for a full 7 years. So get organized because you need to be able to back up every single claim you make.
All right, we're heading into the final round. These are the insider tips, the secret moves that really separate the beginners from the pros who have absolutely mastered this game.
Okay, listen up, because if you take away only one thing from this whole explainer, let it be this. The employer RSP match is the closest thing to free money that exists on planet Earth. It is an absolute no-brainer. If you put in $1 and your company puts in $1, you have just made a 100% return on your investment instantly. There is nothing else like it. Don't leave free money on the table.
All right, let's talk about investing. When you sell something for a profit, say a stock or a rental property, that profit is called a capital gain. But here's the beautiful part. The government doesn't tax you on the whole profit. No. In Canada, they only add half of that gain to your income to be taxed. This makes investing in things that grow in value one of the most tax-smart ways to build wealth. And now for maybe the single biggest tax advantage available to most Canadians: your own home. The place you live, your principal residence, is a special, almost magical asset in the eyes of the taxman. When you decide to sell it, it doesn't matter if you made $50,000 or $500,000 in profit. That entire gain is 100% completely tax-free.
So you see where this is all going, right? It all comes back to this one powerful idea. Taxes don't have to be this big, scary burden that just happens to you. Once you understand the rules of the game, you can turn it into a strategic advantage. Knowledge is literally power here. It transforms you from a victim of the system into a player with a plan. So there you have it. The game board is laid out. You've got the rule book in your hands. The system isn't some scary monster. It's just a system. It has rules, and now you know them. So the real question is, what's your next move?